Welcome back, everybody, to Cover Calls and Short Puts. My name is Mike Fairbourn. Great to have you here with us today. Today, we're going to be looking at really the covered call spectrum specifically, and maybe those companies that are in positions to actually run a little bit higher than we might normally expect. And what can we do in terms of processes, in terms of rolling out that call to take advantage of an extended stock price move. So I'll look forward to going through that with you. I'm joined in the chat by my good friend and colleague, the one and only Mr. Kevin Horner. Folks, any questions, comments you have, throw those in the chat box so we can address those for you. And let's do this. Let's dive into some disclosures so we can just get right down to it today a little bit early. Folks, options do carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Investing does involve risk, including the loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. The paper money software application is for educational purposes only as well. Some additional notes to be mindful of there on this slide. And just finally wanted to state, as we might run into it today, in fact, I think we will, there are risks associated with investing in dividend-paying stocks, including but not limited to the risk that stocks may reduce or stop paying dividends. Rolling strategies, which we're going to be talking about today, can entail additional transaction costs, including multiple contract fees, which may impact any potential return. So with that, it's very interesting. We'll look at the markets actually initially here, then we'll take a look at the sector breakdown. I kind of had those in reverse a little bit. I was taking a look at some of those sectors here momentarily, but let's pull up the market here. And well, as you can see, an all-time high today, a breakout move in the market, and really a continuation on up with some good solid strength behind it. Is what we're seeing thus far. We know there's still 2 hours left in the trading day, but folks, I don't know about what it is in your book, but in my book, I mean, when you take out resistance like that and you have a couple of continuous closes above there, that could be construed as a positive. I was talking to Kevin last week at his discussion of the Horner rule, where you're getting, I think, 3 closes above a resistance level. I think we might actually have that today, 3 higher closes, I should say, higher levels. And I think you're actually technically getting that. Let me know there if I'm wrong, Kevin. But oftentimes, yeah, you want to see a little bit of indication. There would be 3 right there. You got a higher candle, another higher candle, another higher candle. And what do you get after that? Well, maybe a little bit more confirmation of a rally. Now, anything can happen in the markets at any time, and it really does just kind of depend on how much you want to wait for, how much confirmation, what level you're looking for. But we're seeing some pretty good strength in there, and looking to see specifically some of the stocks out there that might run with the market. I'm going to break down the covered call portion here in just a bit, because we're going to take a look at it from a different angle in terms of rolling out those options if if expected strength comes into a given stock. So if stock comes powering through, we're going to roll out. And that's just what I'm saying, is that's kind of tied into what we're seeing here in the markets with the breakout. We might just see additional strength in this market extending up a bit higher here. We'll see, though. I mean, that's a pretty strong breakout technically right now. And of course, that's going to make the bulls a bit happier here. Okay, so here are each of the sectors. As you can see in the bottom right-hand corner, here is the S&P 500 index listed right down there, the S&P. Now, with that, we have seen a few companies here, and a few that I've actually been talking about specifically, that may be in a position to either break above resistance. And you can see we've broken above a few key points of resistance here on energy. Didn't mean to make this line downward sloping, but we actually did break above, and we actually did, I'm just going to start over. It gets so colored you can't see anything, but if I just go like that. Now, the point I'm trying to make is collectively with energy, I'm actually highlighting energy a little bit here today because that's going to be one of our practice paper money examples as we're looking at a covered call here. But you can see where he held that. We broke out, we kind of sat on that level, and we may be positioned based upon some of the move that we've seen in the underlying crude oil price for the possibility of a follow through, right? So that could be one covered call example we'll take a look at coming from that sector specifically. I'm going to show you crude here in just a second, but here you go on materials as well. flag pattern, right? Possibility of a flag pattern in the direction of the underlying trend of the upside. And so could we see that as well move higher? We might. Industrials actually broke, I would say, across a sideways range. This can be really, really helpful in a good way, I think, to kind of narrow down what securities in the market might be showing strength out there. Technology too, breaking above a high range as well. You've actually got healthcare. This is another one of our practice examples today. A company in healthcare that has had a little bit longer term flag, but look at this follow through. Clearly higher highs and higher lows here. Industrials, as you come down here and you look at some of these breakouts that are occurring, even in financials, right there. These are the sectors specifically. Take all these, you combine them together. Well, what are you going to get? If you have that many sectors really showing some strength, just look at the S&P 500. It too taking breaking above those highs as we just previously looked at. So you get enough sectors that kind of overweight that. Boom, you can see a little bit of strength from the S&P 500 index. The interesting thing I'm going to note, though, is that some of these sectors are not breaking into new highs. In fact, they've kind of consolidated, and there might be more room in energy. There might be more room in materials, in healthcare down here, right? There's a flag pattern, and we might play a little bit of a catch-up game as the market's already breaking higher here. Now, I mentioned to you, because I did point out energy specifically, it's going to be an area we're going to be looking at. If I come over here and look right at CL, it might give you an idea as to why we've seen some strength in the energy sector specifically, actually, and those are energy stocks, right, that are breaking above those highs. Look over here with me. This downward sloping trend line, folks, that's a trend line break. That's clearly a trend line break. There was a touch point. Actually, if I extended this up higher, we probably have another touch point here. But we broke that trend line. We cleared the prior high, and this is a higher low. So this is clearly a higher high. Excuse me. This was a higher low following a higher high in the price of underlying oil. When they get the stuff out of the ground, it's just worth more. And that's why those companies in the energy sector specifically could be doing better in terms of revenues, ultimately flowing down into earnings and ultimately cash flows. Okay. And that can help to lift those companies higher. But this may be kind of a change in trend that we hadn't seen in a while. And we'll see if we do continue higher. But some of those energy companies are looking a bit interesting. We're going to dive into that actually here in just a second. As we look at some of the companies that are out there. Now, I'm just going to pull up. This is not one of the companies I'm going to look at, but I did send out a tweet on Apple today. Apple, as we saw, information technology is also showing some strength. We have begun to go into a bit of a sideways channel here. Anytime you're going to get, folks, similar highs and higher lows, just if you can map that out in your mind, similar highs and higher lows, it's going to give us a price pattern formation out there, which is referred to as a ascending triangle. We're going to be looking at patterns that are a little bit similar to this, more of like on the flag side, but a lot of companies in the tech group are showing this as well. Okay, as we just kind of step back and look at this. Now, anytime a company has made a high over here and had 1, 2, 3 touch points, maybe heading to a 4 touch point move to the upside in terms of the testing the upper level here of that resistance point. I should say the upper line of the ascending triangle, right? Before we're heading to the vertex of that triangle, which means that when we get to the vertex, that's when we're going to actually move. The triangle formation, at least that's what the pattern tells us. We should get a move before we reach that point. Until there's a convergence of that horizontal trend line and the diagonal trend line coming together, the vertex of the triangle, we should get a move occurring before there. It might happen now. I mean, any hints there? What's the market doing? Markets are breaking higher. We know that with, say, for example, the NDX. Well, NDX is shooting up higher as well. By the way, you can see up here, I do have an extension. If this is a flag pattern follow through, a 100% extension takes us above the highs. So if we do get a follow through, this would suggest that we could get into the high range. Of course, we got to continue to make higher highs and higher lows. But, Apple is part of this tech heavy NASDAQ 100 clearly, and we might see a test at that level? Could we perhaps break through? That's the question. And here's the interesting thing. If we have stock in here, how can we get paid income in the meantime as prices are doing one of these, kind of consolidating in a range? That's quite a consolidation. If we had said to ourselves that we thought that this area up top here does represent formidable resistance. Okay, we're thinking, hey, resistance may be futile down the road here for a while. Well, if we're selling calls, still owning the stock, but maybe selling calls above that resistance level, that would be somewhere at or north of 240. Well, that could equate to each and every month that this has happened thus far, the possibility in a way to bring in income from a stock position that we've got. It's not the price of Apple moving higher like the stock price. This is actually collecting off of the, well, I've highlighted it here. This is a short call. We're selling calls. Now, it's very likely that, or much more likely that we would just collect that premium if the price of the stock can't bust above that 240. Now, if the price of the stock goes above 240, if that's where our strike price was, well, we know what happens there, right? We have to give up our stock. But if there is any expectation that there might be a little bit of a sideways range, well, that could be an interesting collection over 1, 2, maybe 3 months, or maybe even more of that income. Now, of course, we're looking at it in hindsight. This is how it's played out, but that's what traders kind of will try to anticipate. We see strength in the stock. We anticipate strength in the stock. We're going to get into the roll in just a second because we want to hold on to the stock because we think there's strength, but we think that it could go sideways as well. Real quick, real briefly, although this is not one of the companies we're doing an example trade on today, it could be. It's a little bit higher priced because we got to buy the underlying stock as well. But I'm just going to go over here and kind of point out to you right now, if we were looking at 240, where is our 240? Again, we are on the call side. Our 240 strike, right down the middle, if I pull these over to the left, it's 310. Now, I'm just going to say that if we expect, this isn't going to be exactly right, but just for the sake of example here, the price of the stock went roughly to that 230 a few times over here. We know here clearly, here and here. Well, we're here again. But in each of these months, if we were selling, we have, let's say, 100 shares of stock, because you need 100 shares of stock to sell one standard equity options contract, right? If you're going to sell one call, minus one call, you have to have at least 100 shares to make it fully covered. Otherwise, we're naked or whatever the case might be, and that's not good. We have 50 shares of stock. It could work against us by 50 shares because we'd be technically short, 50 shares. We have a taking on risk above a particular strike price, clearly, of 50 additional shares. So 1-to-1 ratio, 100 shares for every one contract. Many of you already get that, but just as a quick refresher, especially for those of you just joining us, that's what we're looking at here. So you always want to make sure that that is in place first. Okay, you got to have that. But had we sold this and just using that as an example only for what a covered call could do for us in terms of generating income, I'm going to put it down to $3 a share, or 3, right? As opposed to, it was like 305 or 310, but we'll just make it a little bit more conservative and say 3, 3, and 3. Okay. Now we know there's a multiplier here of 100. So you're going to be looking at 300, 600, 900. What did the stock do? Basically, it went flat. It stayed within an ascending triangle formation. It's looking more positive like a breakout, but yet it has not broken out yet. This is kind of the expectation. We're thinking that there could be a little bit of a pause. We're happy to try to collect whatever, how long it takes until prices break higher. Still keeping in mind that we own stock. And when we own stock, there is the risk of a downside move as well, right? I mean, if prices do break lower, say, for example, prices take out the trend line here. If they take out the trend line here, just like on any triangle or ascending triangle, in this case, you'd want to be mindful of any sort of exits that could take place there, right? Exists. Okay, let's just spell it right. I'm actually going to write the E correctly too. How about an exit? We own stock, so that's got to be a front foremost kind of importance in our mind. We own stock. If stock goes down, we're experiencing that dollar for dollar all the way down, right? Now, we do get a slight benefit in the fact that even if prices go down, there's an offset here based upon however, whatever level we sell that, we buy that call back for. It was $300, maybe we capture 200 of it, right? So it does add to what we're getting. In fact, if you look at this, prices have basically done nothing, absolutely nothing through here. At that point, back in July, we're still here, but yet we may have been able to collect, let's say, in our example here, maybe $900. Okay, and nothing's happened. So that can help to change sort of the profitability of a position as well. Now, if prices break out, we're going to talk about that on our example trades here in just a second. But if they break out, we may want to consider the short call that we had at 240. We don't want to give up our shares of stock, so we might want to consider buying this back because we don't want our long stock to be encumbered by this short call up top. Because, right, if we're above here, there's an incredibly high chance, probability that we're going to get, our stock is, we're going to have to give up our shares of stock. We got to sell it at 240. We still got to make the gains from where we're at, 230 roughly, up to 240. So there's an additional 10 points we can make on the stock in terms of a capital gain. That would be, in my book, if we're talking about 100 shares, in my book, I'm sure it's in your book too, that'd be an extra $1,000 roughly from where we're at if we're calling this 230, the current price. So that's there too, but my gosh, maybe there's a bigger upside potential. And we're so bullish on Apple, whatever the case might be, whether it's oil or healthcare or whatever it is, we think that the price of the stock is going to go up. So we decide to kind of close out that call for sometimes break even, depending upon how much Theta has expired, sometimes a slight loss, but we don't want to give it up. That's kind of the risk we take. We say, hey, I'm happy to collect in this month, and portion of this month, but if it breaks higher, I want to close that short call because I don't want to get out of my stock. All right. Now let's just see how everybody's following along here. Pretty good. Hey, by the way, welcome all. Great to have you all here. And as I mentioned, is there a survey? Oh, there is a survey link, folks. Kevin's got that posted. Yeah, so if you find anything, you don't have to do this right now, but I mean, during our session sometimes, otherwise that survey doesn't work. There's only 2 questions. If you find something helpful, useful from the presentation, that'd be great to know. Any topic requests as well. I look at each of those comments, and so does my manager. Appreciate it. By the way, while we're at it, hit that subscribe button, bottom right-hand of the corner, if you're not already on board. We have over 123,000 subscribers, and would love to have you join us. You can see great content from Kevin, myself, the other coaches as well. If you like today's presentation, be sure and give that like button a monster mash, okay, for the holidays. I don't know, I don't think October is actually a holiday, but no, it's not. Today is actually Columbus Day. Speaking of holidays, did not show up on any of my electronic devices as a holiday, but I do think the post office is closed, interestingly enough. Yeah. I've been waiting for some mail and didn't come, and that's why. All right. Well, let's just do this. Let's take a look at a couple of stocks. I'm going to have you select one of these. I'm going to throw out a poll and have you decide on which one of these we're going to look at. I mentioned I wanted to take a look into energy. I'm going to do energy first here. Energy has been down, but there could be some value associated with the growth potential if, of course, crude keeps going on up, if it keeps going higher. Halloween, yeah, that's right. That's right. It is an important holiday. Yeah. I don't know about you guys, but we have a neighbor that moved in a while back. She just does hot dogs. That's what she gives out, hot dogs. So, of course, she's my next door neighbor. I've got to go see her on Halloween. No, but it is interesting. I have never seen that before. But anyhow, there you go. Now, back to ConocoPhillips. This downward move, it is fascinating as you look at this here. You notice that you guys, do you recognize any patterns in here? There might be a couple of different patterns actually occurring. there is the possibility, this is kind of a two-headed beast in this scenario. You got the inverted head and shoulder. I'm going to go ahead and go shoulder. That's an inverted head. You got a double-headed shoulder, the two heads, just in time for Halloween. There we go. We don't know if we'll hold here or down through here, but there you go. Sometimes you do get the two-headed beast, which will show up, but it's just a double bottom and reversal. That is, it could be an inverted head and shoulders pattern, which sometimes you get big moves off the bottom here and a big start up. We shall see on that. We don't know. So that's the question. But I will say this, there's also one more pattern before we take a look at it in terms of the covered call. Look at this. Recognize that pattern? It's referred to as a W pattern. It might be referred to as other things as well. But with that, you actually did get a new high. Just technically, yes, we broke above high. Look at this little mild flag pattern here. And then the possibility of a follow through is where some traders will look at it. There is earnings coming up as well. Someone used to give out sodas in my neighborhood. Interesting. We used to have a dentist, Will, in our neighborhood that would give out, he'd give out the little toothpaste with a toothbrush, right? It's for everybody to, I think he was actually marketing so that the neighbor parents would go to him as the dentist. But hey, I'm sure it saves some cavities. It was a good little addition there. Yeah, right on. Okay. Nice. Okay, so that's one we want to look at here. A quick note, how are we doing over here on our implied volatility? Okay, about 32-ish, right in that range. Okay, so 32. Okay, we know that that can impact the price of the underlying option by the amount of the Vega, right? We're looking over here at the calls, and so we've got that to kind of look at. Now we've got, I'm going to add a couple of additional points in here, by the way, how we start the call off. But the next one I wanted to look at, so I want you to choose between these two. Notice the price on this one. It is $109. This one's substantially less, and it's got a little bit more of a difference off the bottom. In fact, we have a trend that's come up. Now you'll notice this might tie in a little bit. The other one did too to some degree, more of a downward move, but they both went kind of into a sideways range, which could be kind of fertile territory for the covered call potential up top near a resistance point, perhaps. We've been stuck in this range. Now, we could break out. We don't know if we will, but I wanted to throw this one out here as well to you so you can all kind of see that. All right, and let's take a look too at the implied volatility here. Not too different. Now, the one thing is different. We're in the 30s, right? The low 30s on both. But this is separated out. It gives us a little bit more flexibility. Not only is the price a little bit cheaper, think about the covered call. We've got to purchase the underlying. One is at 109, one is at 27. All else equal. One has gone into a consolidation range to the downside and begun to maybe form a W bottom. This one has that same sort of similar pattern, but it's got a trend going up. It's cheaper. They both have volume right in this range right now, and they both have a pretty decent spread between the bid and the ask price. Both are in the 300 range and I should say 3 digits and 4 digits in terms of open interest to kind of give us a sense of where it might fall within this range over here. Now this one, wow, this is a little bit wider over here though. I kind of looked at the put side and I looked up here, but it did widen out a little bit. I will say this though, we would be looking to sell out of the money because it's going to be up towards that resistance level. More on that in just a second as we focus on Delta as well. A strategy here, a specific strategy for the possibility of a rolling of that call. But as you look over here, these strike prices aren't, I should say the spreads are about a dime. Substantial change in here. That was not that way when I looked at it about an hour ago. So I don't know what's going on intraday on this, but normally this kind of volume on the stock, it does tend to yield a better price. But yeah, something doesn't look quite right. I don't know if that, I'm not sure what's going on there, but these are just way off, many of these. Anyways, we'll get to that here in just a second. But let's go ahead and just send this poll through. And I'm going to go ahead and just, oh, sorry, one second. Type this up real quick and I'll send it in. There is our question. The first one was COP. The second one is MRO. And we'll give that poll about 15, 20 seconds. You guys decide, and we'll just see what we get in here, what your selection might be on this before we look at it. Coming back here too, just so we're looking at the charts real quick, look up top with me, folks. This is the resistance range right up here. So remember we were looking at that as Apple as our initial example. Look up top here. Well, that's about 30. So we could be looking at a 30. We're real close to 28 right here. So what does this represent in terms of a delta, which we're going to break down in a little bit more detail here in just a second. So it looks like MRO is right around 60, 61. Perfect. Appreciate you guys voting. And I'm going to go ahead and just end this in about 5 seconds here. And yeah, good. We'll end it there right at 61. Perfect. Okay, so MRO wins the day in terms of the selection. So MRO, again, I think that the trend can be of interest too. We've been holding this upper range, which is interesting. Really flat. There's some good support perhaps down here. Right now there is at 26. Resistance really at 29 and then really above 30 here. We're right now around here around 28. Still like COP getting a little bit of a flag pattern. Okay. Now let's switch gears completely and take a look at the trade itself. We know 30 was that upper range where we might say, yeah, we think it could bounce around there a little bit. So let's do this. Let's talk about delta first of all. I want to have an approach using delta as well. So the first approach that we'd looked at was really, where is resistance? Resistance, 30. Okay, so if prices get up near 30 or break above 30, then we could consider closing the call and just rolling it out, right? But buying it back and selling another one further out in time. Now, which ones might we select though? We have a delta approach too. And again, remember delta, for a $1 increase in the price of the underlying stock, the options will go up or down based upon what the delta is itself. So this stock were to go up, MRO were to go up $1. This 28 strike right here that we're looking at would go up what? About 50 cents. 50 cents, this range. This range should be a 50-cent range here, okay? So there you go. Okay, these spreads got a little bit better. I don't know what was going on there. That was funny, but anyways, these stayed fine. Now, if we go out and look a little bit further, here is that 30-cent level. It does happen to have the most open interest for sure. I should say the 30 strike. The 30 strike right there, that $30 level that we looked at. Now, here's an approach. When you look at the delta and when you sell that call initially, generally, what traders might look for is the call option on the original sell when we're putting the position on itself, okay, would be between 20 and sometimes 40. 40 up here. I want to say 30-ish sometimes, but it could be right up to 40 is where they might go. Okay, so that's on the initial entry. We're going to talk about the rolling out, the buying it back, where that delta generally is at. It's going to be very close to 30. I should say at the money. If we do go up to 30, where's our at the money right now? We're at 27, right? 27.77, real close to 28. There's 28 right there. We're not quite there, but it's oftentimes north of 50. So sometimes between 50 and 60 could be where we close the call out. Let me just draw this in. I just figured I could do it right now. This is where we would sell the call to create the covered call. But if a rolling condition came up and prices were too strong and we thought that, shoot, we've been consolidating for a few months now, this could be a really strong breakout of the upside. I don't want to lose my underlying stock. This is where we would buy it back. Okay? We would buy the call back here. And what would that effectively do? That would close out this position. Can I draw an X all the way through there? Yeah, maybe so. We would close out the covered call, the call portion, and we just own stock. But when that occurs, then we have to do this. We want to reverse back it around again and go right back into over here again, back into this range for the creation of the call. And that, folks, is the rolling process of the call itself. Okay. Let's park this in your minds for just a second before we go through the figures. I think it's more important to get this in our heads first. I know many of you have got it, but I just want to just repeat it one quick time. So price is coming up here. We sell the call when we're right down in this range, which we're going to do today actually, because we've selected this one. Here is our short call. We know that this is about a 0.24 delta right now, 0.24. And when either a couple of things could occur, we could be using this example. I'm going to look at the delta kind of first, and I'll put it on the upside here. But the delta is going to be, 0.5 plus. It should be above 0.5 if we are, close to the money or slightly at the money. Generally, what we'd be looking at is probably a break above that level right there. It's not quite 30, right? It's not quite 30. The high is 30. We had a little bit of this wick of the candle that shot up above, market reversal. Market rejected the 30 level and we came back down. Okay. But right at that level at about a 0.5, we could decide to close. So we'll do it in black here and then red. So here we go. So we sell the call here, and that call is 30, and then we buy it back up top 50, and then we can then look to sell another call again out into the future. And where's that call going to be in that range? 0.2 to 0.4. Okay. All we're really trying to do is trying to generate, earn an income here. And there's the possibility of dividends. We mentioned that actually in disclosures too, but there's the potential of dividend income plus the covered call, so that if there is a sideways range, we can still try to collect some income through here. But if we start to break out, we're okay closing it and rolling that call for future income at a higher level, obviously, a higher strike price. But we want to let the stock move too, because that's kind of the core. We just believe that maybe on a particular company, we just think there's just going to be more strength at the upside. And that's what we want to stick with. So let me know if you have any questions on that. Hopefully we've clarified that portion a bit. I'm going to take a look at the chat in just a second, but let's just quickly look and see what this looks like. And in fact, the first thing I'm going to do is actually, because I don't have any positions on this stock right now. Okay. What I'm going to do is I'm going to buy the call first. This is going to actually turn into, you might already have the position on the stock, right? This is going to be a new position. I bought 100 shares of stock so that now technically we can create that call. Okay. You say, gosh, Mike, this is really low. I mean, this is like 30 cents, $31 or so. True. But remember, this is a lot less than Apple. But Apple, I think, was in the 200 range, right? And that can have a big impact on these option prices. I know. Hey, that 31 cents does not look great. But consider where we're getting this at. It's at $27 and change. So all things are kind of comparable. And sometimes some traders would say, shoot, I have 500 shares of the stock or 200 or whatever. It might be more than 100. So when they sell the calls, to get a full covered call, they're selling lined up with that. So if it's 200, two contracts, 5, and yes, that money can come back in terms of the premium. You can get more that way. I realize it's small, but we're just going through the process here. Okay, so let's go ahead and I went through that kind of fast. Sorry. We know what the risk factor. I'm just going to pull another one up just so you can kind of see what the confirmation dialog box. Yeah, the buying power effect, the margin requirement was 27.8 roughly that we'd looked at previously. And there you go. Of course, you've got, this is underlying stock. Now we're just going to sell this call option contract and see what we get here on this. Remember, we're selling that to generate that income over time. And when I say over time, we're anticipating it staying below that strike price and really just chewing away, just chewing away at that theta, whatever contract it is, whatever option we're looking at. That theta decay is nice in the sense that that's 7 days a week, including holidays, right? When the markets are even closed, it just erodes. It erodes. And that percentage in terms of what's going to be out, what is available to erode, or the premium on that option will go higher over time as you get closer and closer to expiration. But we're waiting for that theta to decay. Look over here with me. Because we own the underlying stock, there's no buying power effect. So there's no margin requirement to do it. Looking at our credit, the max loss does not understand that we have the covered call. So just so you know, the max loss says infinite. That is not true. The max loss would be the price of the stock going to zero less that credit. That's the stock going to zero. That'd be the max loss. Let's go ahead and send this through right now. And we're going to get a fill of about 34 cents right there. Okay. That would be theta. Hopefully I didn't say beta or checkout. Apologies if I did. Yeah, theta is the time decay erosion right through there, day after day after day. The next one we're going to be looking at has a little bit more theta to it. It's a little bit more priced a little bit higher into the healthcare area. Let's see. No, I did not, Jack. I did not do that cover call on Apple. That was our example trade. I want to just do a couple of others, but that could have been potentially one. It was a little bit higher priced. And we saw this too, though, as one that did have, well, it's got a little bit higher premium for the 240 that we looked at, but it's $230 stock as well. But same kind of a game plan in a sense, especially what we've been saying previously. There might be an expectation for a strong move, but we also think that it could pause along here for a period of time too. And that's where that covered call could come into play specifically. Okay, and Alligator's got it. You got it. Okay, cool. Yep, exactly, for checkout. So there you go. There you guys have got it there. Remember, and this play was really looking at strength that we'd seen on a recent breakout with energy prices. Can energy kind of consolidate? There have been some risk factors with energy in terms of, Middle East contention, and that could be an issue as well. One quick note I'll say over here is that you are looking at the money flow. We don't know if this will unfold either, but I did track this and say that money flow line right there, which looks at buyers and sellers, it tries to net them out. Notice that is a high. It's a higher high than this point. Now, why is this point interesting? Well, this point represents that price level right there. That price level happens to be 80. We broke above that on the money flow. If you break above that on the money flow line and you're up to that point right there, according to the money flow, doesn't always happen, but it is a unique indicator. That's why traders will use it, is they say you've got enough volume to push this up. So their expectation is that you'd see a break above 80. At least it should take out that high according to money flow. Now, did it break out above this high yet? No. But what if it makes higher levels above there? Well, then that would be the expectation that it might break above this range a little bit higher, so on and so forth. So it can be a leading indicator in that sense. I have to say, though, with oil, it's a little bit tricky. I will say this, though, with MRO, we don't know what's going to happen, but look at the trajectory of oil. It had been actually going down generally and consolidating. You guys selected MRO. MRO found a way to show more strength even as energy prices dipped relative to COP. So that was the last thing. The reason why I'm going through this again, there's MRO. We actually broke up and held that ground. We went sideways even as energy was dropping. Now things can change, but you like to see that, at least historically. COP looks a lot more like crude, the price of crude itself. Okay. So there we have it. Okay. The reason why I go through this is because, too, you want to be thinking about a stock that might have potential. Because remember, we own the stock in this case, in this paper money example, and we're looking for shares to potentially exceed a range and actually break out and possibly even go higher above this channel line. Okay. All right, let's see. For checkout, it says, hey, Mike, can you show us how to exit based on the delta? Yes. So let's do this next one. I've got one more example here, and I'll really hit that, focus in on that as well. So here is BMY. Okay, so BMY, a fairly strong recovery up through here. Real close to a triple bottom, if I'm seeing that right. Clearly broke above this range on a good earnings announcement. I know there was an expectation of higher earnings. We have made some similar highs over here, kind of consolidating near. Here it is again. There's your resistance level right around 55. Let's see what our delta shows us as we break that down for checkout here in just a second. But look at this, folks. This is one, we're not going to do a poll on this one. I didn't really have a comparable here, but look at the consolidation right there. Flag pattern, perhaps? Could be. I mean, that looks like the direction of the trend up. You're flagging a little bit. It has shown some strength off the bottom. And let's just check this one out. Okay, by the way, that's a 60. Okay, so it's a $52 stock, a 60-cent dividend. It's probably got fairly high dividend yield. I'm just going to check it out right now. You have 4.56 dividend yield. Total side note, but that could be potentially another source of income that traders can look at. That would be the dividend. Okay, now over here, let's look at the trade and let's break it down specifically. And by the way, I'm just using the front month contract. I'm going about 30 days. Normally 20 to 50 days is what we're looking at here. Okay, so this is what we've got. I'll kind of zoom this to the top so we can see it a little bit better. But so these are our ranges here. Yeah. Okay, so how could we exit based upon the delta as well? Okay, so first of all, let's do this. If we're looking at it, we said between 20 and 20 and close to 40, right? In terms of selling the call itself. Where are we here? Well, we're very close to 20. Sometimes when you don't get the dollar for dollar wide strikes like we had on MRO, this is 250 wide. We might get a weekly where we could do it though, and we could look at the weekly. Should we do that and just see what the spreads look like as well? Look at those. That's a penny wide spread right there. That's about 4 cents as well. Looking out into these two right there. There's your 33. That would still fall within a range there, the 55. We could still do the 55. It's still at resistance. So you kind of anticipate the prices are going to hold below that level. But if we were to come down here and look at our weeklies, you can see that they are dollar wide spreads. And as we scoot on down here, the spreads are they're pretty decent too. The one thing that we're lacking is some of this open interest, which is just phenomenal up here. That 55 is at 10, so 10,000 and change, 3 million shares on the stock traded today. So looking at that right there, penny wide spread, I might just stick with that one for now as that higher resistance level. There was a kind of a gap over here too, extended to the right, dot, dot, again, 55, still a little bit higher than where we were. We could sell that one. So now can we show how to exit based on the delta? Yeah, so what we would do, let me put the trade in and we'll do that absolutely next here. So I actually have 300 shares of stock on this that we bought in the generating income portfolio. This was kind of we thought it might be, it was coming down here. It kind of held a little bit and it did bounce. So there was a bit of a bounce there. We're up on that. But we had some good gains. But maybe we've got 300 shares as an example. What we could do, some good paper money gains. Let's go up top here, and I'm going to go ahead and click on that 55. And we're going to scoot down here, and we're going to click on 3 contracts now, because we've got 300 shares, right? So that we could have a full covered call. Confirm and send. You can see the buying power effect, because we have 300 shares of stock. There is no margin requirement. Nice. The credit is 282. Generally, we'd be, expect to see that if we can hold below that 55 level by expiration, 30 days. The max loss, it's not counting, it says infinite. That's not true because we own the underlying stock, right? So let's go ahead and submit that through, and we got that fill at 94. So question is show us how we can exit based on the delta itself. Okay, so what we would be looking at here is the delta, and we'd be wanting to know if we do get up into that 50 to 60 range. We're at 33 right now on this delta. So what kind of an influence we have, that's going to put us really close to being at the money. You can see us right here. How close are we? We said a little over 50. Look how spot on this actually is. 52.50 is that strike, and we're at 52.65. So one thing we could do is we could give us a notification too on this trade when, say, for example, this option itself. I'm going to go ahead and right click on this. I'm going to go down here under, let's see, create an alert. And what I'm going to do is we've set our alert now on Delta. So I want to be notified via text message, via email, because we have that set up, right, in notifications. When this is going to be at or above, I'm just going to say 50. Let me know, because that might be the range where I could, buy the call back there for checkout. And then what we could do is we could look to sell a call again back in our 0.2 to 0.4 range. That way the stock could potentially run higher if we're right, on an expectation. Okay. So you could just say here, potentially close the short call. Calls in this case, plural. Okay, there we go. All right, so hopefully that's clear. Excellent, folks. Give us a follow on X. Kevin's got some great stuff on. You can follow me at Mike Fairbourn CS. Love to have you on board. I did post actually that Apple, just a quick visual. Oh, I have it already there. So I'll try to post these. I know Kevin does the same thing, but yeah, there's a visual of, yeah, this was actually for a class as well. I wanted to do as a kind of a highlight there too, as we look through it. But that kind of stuff, folks, hit that subscribe button, give that like button a monster mash. And folks, there is a survey link in the chat as Kevin had posted. And it was nice being here with you today. Look forward to future discussions. Take care.